Philadelphia tends to rank among the nation's steadiest apartment market performers. Today on Apartment Market Dynamics from MPF Research, we'll take a look at the latest stats and talk about why typically consistent producers like Philadelphia have meaningful appeal as investment choices right now. I'm Greg Willett. Cameron McIntosh is here as well. Cameron, I was just in Philadelphia for the Urban Land Institute meeting. It occurred to me we haven't really talked about this metro for a while. We do tend to ignore it, partly just because it's difficult to come up with an interesting story when the numbers are so steady from one quarter to another. So get us going on that business as usual story. Tell us a little bit about occupancy and the supply-demand numbers that have shaped that.
Absolutely. Philadelphia's current occupancy rate is 95.3%, and that's very normal for the metro, which is simply a 95% occupancy type market almost all the time. But looking back over the past couple of decades, the only time occupancy was roughly 100 basis points above or below that 95% mark for more than a quarter or two was a 5-quarter stretch where occupancy ran between 92 and 93%. And that was during the Great Recession, that late 2008 going into the 2009 time period. With that stable occupancy performance, supply and demand obviously were basically in balance over the course of the past year. Total deliveries accounted for 3,629 units, while absorption totaled 3,272 units.
Turning to pricing power, annual rent growth for new resident leases has averaged between 2% and 3% over the last couple of decades, with the performances rarely straying much from that long-term norm. Current growth is, you guessed it, right in that historically typical zone, with the pricing as of Q1 up 2.2% from the year earlier level. In a switch from the pattern you see in most metros right now, Philadelphia's strongest rent growth is in the top tier of product. Class A units are realizing 3.6% pricing increases versus growth of 2.2% in the Class B properties and just 0.5% in the Class C stock.
A factor that helps keep Philadelphia's overall apartment performance steady is that building activity tends to be held at pretty easily digestible volumes. Ongoing construction has ramped up to the largest tally since we've been tracking the market over the last couple of decades. But even that total isn't particularly extreme. Properties totaling 8,044 units are currently under construction, translating in a near-term inventory growth pace of 2.3%.
Our forecast for Philadelphia's apartment market calls for more of the same. Occupancy should hold between 95 and 96% over the next couple of years, and the expected annual rent growth pace averages roughly 2.5%.
And those are okay, but not spectacular numbers.
True, but that's a story that has increasing appeal. As we talk with clients these days, the topic of downside risk comes up over and over again, and that means at this stage of the cycle at least, many are looking to deploy capital in spots where the range of possible outcomes is comparatively narrow. The sure thing is getting strong consideration, even if the actual return on investment isn't all that great. Philadelphia never comes in at the top of the charts for performance when times are good, but then again, it's usually a great place to be if there's an overall stumble in the U.S. marketplace, as it doesn't have to deal with a whole lot of new supply that's going through that initial lease-up process in periods when economic growth is comparatively weak.
And that wraps up our look at Philadelphia's apartment sector, one of the best choices you can make if you're a risk-averse investor. I'm Cameron McIntosh, and he's Greg Willett. We hope you'll join us next time for Apartment Market Dynamics from MPF Research.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.